Thank you. My name is Peter Christie, Chairman and CEO of Activeport Group. For those that aren't aware, Activeport listed on the ASX in 2021. We're a software company. We build enterprise software for telco and data centre. Now, when I present to technical conferences, we tend to talk about the technical advantages of Activeport's product. When I talk at investment conferences, it makes sense to talk about the investment quality of Activeport's product, which is what I'll do today. Having said that, let me give you a bit of an overview of what our software does. Activeport, if you think about the life of an IT manager, which is our end users, and I'm sure you probably don't think about the life of an IT manager, but if you did for a moment, if you were an IT manager running BHP's global network or Commonwealth Bank's national network or Louis Vuitton's chain of retail outlets, you spend a lot of time buying compute capacity and data storage capacity, and then you join those together with a network. And if you're an IT manager today, you can buy compute and storage quite easily. You can go to Amazon's AWS site, you can go to Microsoft's Azure site, you can go to Google Cloud, you can dial up compute and storage very, very quickly. It used to be a lengthy, capital-intense process, but today it's instant. But when you go to buy the network to connect your users to that compute and storage, that's still a very long-winded process. It can take up to 8 weeks to get a network service provisioned in different parts of the world. What our software does is cloud enable those legacy telco and data center networks. So when a telco adopts our software, they can now sell their network services to those IT managers in the same way that that IT manager is now used to buying compute and storage. It becomes a very instant-on experience. And so our software for our telco customers has got a very high utility because we can help them generate more revenue, generate cash faster, reduce churn. It's certainly a customer-facing product for our telco customers. So that's what we do. But if we step back from that for a minute and think about why Activeport is a good software company to invest in, I think it's always worth reflecting on what makes a software company a good investment in the first place. And the things that I always look for, and a lot of investors that I speak to look for, are these three things. A good software company investment has to be selling their product to a very large market. You want to have a deep, broad market that you know you can generate a lot of opportunity from quickly. High ARPU, so average revenue per user. It's very good if the software product generates a lot of revenue per user. It's not essential. There's been some fantastic ASX listed software companies. Dropsuite is one that comes to mind where their revenue is quite low. Their revenue per user is quite low, maybe $3 instead of $50,000. But typically, the lower the ARPU, the longer it takes to get to profitability and the more capital it requires to get there. And so a high ARPU software business makes a better investment, in my view. And then recurring revenue. We obviously want to invest in a company that doesn't have to get up every day and go spend money finding a new customer. We want to make sure that we've got solid recurring revenue. And in that context, if I look at Activeport, we definitely deliver. Activeport's target addressable market of telco and data centres is around $4 trillion. Now that's obviously a lot of infrastructure in there, but people ask me how much of that is licensable revenue for Activeport, and the answer is about $360 billion. So there is a significant target addressable market for us in that space. And the customers for us are all the major telcos that you would know, people like Singtel, Telekom Malaysia, Reliance Jio, Telstra. They're the sorts of customers that are in that sector. Our revenue per customer is in excess of $2 million per year. Obviously not all our customers are in that category, that is the high end, but we have a range of businesses buying our products. Some spend $10,000 to $20,000 a month, some spend $100,000 to $200,000 a month. So certainly a high revenue per customer or a high ARPU business. And then when we think about recurring revenue, our customers, once they're using our product and they're using it to be the primary front-end revenue earner for their business, it's a very sticky software proposition for us. Our customers typically look to us as a long-term partner in their business, certainly more than 10 years. So across those three factors of a large target addressable market, high ARPU, and solid recurring revenue, I think Activeport as an investment delivers in all those categories. But then it comes to why Activeport and why now. There are plenty of software companies on the ASX. Activeport itself has been there since late 2021. Why would you invest in Activeport today? And I think you can classify that into three different categories, and that is risk, competition, and timing. You would invest in Activeport today because we're being successful across these three categories, and let me drill into that a little bit quickly. In terms of risk, any tech company that's a startup, and Activeport was certainly a startup. When we listed on the ASX in October 2021, we had no software revenue, and we scaled that very quickly to $6 million a year in software revenue. So we definitely classify ourselves as a startup. And like any startup, you have to go through a process of de-risking the business as you raise funds. And we've been successful in doing that. Our product now, after 4 or 5 years of very, very intense development, is broad and deep. We have a perfect fit for the market that we're chasing. So we've certainly de-risked the product. And then when we talk about product market fit, we in the early days, we experimented with different channels to market, and we certainly found that product market fit in the global telco sector and certainly in the data center sector. So our product market fit is perfect. Financial de-risking, I've got some information later on our balance sheet. I think we've spent a lot of time the last year and a half making sure our balance sheet is sound, and so I think we've de-risked the financial side of the business quite successfully. And then team. We've had to make sure we get the right people in place, and I think from around July or August this year we've achieved that. We now have the right size team with the right skills, and we're starting to move some of those people into different parts of the world to make sure we've got the right people in the right location as well. So we've certainly spent a lot of time making sure that we've got the right team. And so where we're at today in terms of our risk profile, we're scaling the business. We've dealt with our product, we've got our market fit, we've got a sound balance sheet, we've got the right people in the right place, and now we're really focused on scaling the business up. And so out of the three factors of why Activeport and why now, risk is one. The second one to think about is competition. If you're going to invest in a software company, you want to invest in a software company that is ahead of the competition, and I think we certainly tick that box. Across our three product sectors or license revenue sectors of software as a service, enterprise licensing to telco and data centres, and our hidden gem, our GPU orchestration business, we certainly have what a lot of investors refer to as a moat, or we are building a strong moat in at least two of those sectors. How do we know that? When we bid for tenders, RFPs, RFIs in the major telcos around the world today, we typically find we're the only vendor. The last RFP that we bid for, we were the only vendor. The customer had to ask other vendors to bid to make the process look a little bit more competitive. And so if as an indicator of competitive advantage in a market like ours, the fact that we are one of the few products in the market globally that can do what we do for a global telco or a data center operator today, I think is a fair indication that we're competitive and we're building moats. And then the third factor of why Activeport, why now, is timing. One thing that we have had is fairly lumpy revenue for the last 3 years, and a lot of analysts say to me, well, we're trying to understand what the underlying recurring revenue looks like, and I think this half-year result in the last 2 quarters has started to highlight what that looks like. You can see here that our recurring revenue in FY24 is $11.7 million. The numbers we put out today show 5.3 as recurring revenue. Whether it's a blessing or a curse, we have some large one-time license revenue deals that we've booked over the years. It seems every year we've done at least one. This year is no different. We have a one-time license revenue deal that we haven't booked yet because it's conditional of $4 million. So our total revenue at the moment is looking at 9.3, and we've got half a year to go. What I really like about this, though, is as we've been shedding some of our legacy lower margin revenue and focusing on our software revenue as our GP is going up. So our GP is up from 54% to 67%, and it will continue to grow into the high 70s, perhaps into the 80s as we add more software license revenue and less services revenue. One thing about some of these one-time license deals or any of our license revenue, there's almost no cogs attached to our license revenue. So when we book a $4 million deal, the $4 million of cash goes straight to the bottom line for us. That particular deal, if it closes in the year, is actually $6.2 million in net cash to Activeport. So I think from the financials, in terms of timing, you can see now that our recurring revenue is starting to shine through. It's good revenue with high GP. We're still booking the one-off license deals, which is the cream for us. And we have a lot of potential new revenue coming through in the AI market from our GPU orchestration product. What I'm particularly happy with is the bottom line there, the debt line. At some point in the last 3 years, we had $4.8 million of debt on our balance sheet, and some analysts were a little bit concerned about that. It was what I would call safe debt, but it was important that we cleared that. We're down to $1 million as of the end of the half, and we don't intend taking on any new debt. And so we've got a very clean balance sheet, and of course if we book these one-time deals, will be the reverse of debt. We'll have a very significant positive cash balance, which will give us the war chest we need to really scale the business quickly. So in terms of why Activeport, why now, we've de-risked the business. We've got a very competitive position in the global telco market, which is very deep and very broad opportunity for us. And our balance sheet is looking very, very strong. So the opportunity for us in the next half and going forward is this. We really want to get to a recurring revenue base above our cost base. We need to add another $500,000 of recurring revenue per month to achieve that. We think we can get there this year. And the metrics demonstrate that that's achievable. With our current average revenue per user around $50,000 a month, we have a pipeline of 2,000 prospects around the world. We're dealing with some of the major telcos at the moment in regions, so Telecom Malaysia, Singtel, Bharti Airtel, Lightstorm, a raft of telcos through India, through Southeast Asia and through the Middle East, and we'll broaden our reach out into Europe and the US as soon as we can. But from that 2,000 prospects in our pipeline, generating the revenue we need to get our recurring revenue above our cost base is imminently achievable. And of course we have leading technology. We have some fantastic technology. We have some brilliant products coming through that will accelerate the revenue growth. And so I think we're in a very strong position to be very, very successful in 2025 and beyond. That is it. Thank you very much. We have a table out today, so if anybody has any questions, we'll be out there for the afternoon. It'd be fantastic to talk to you. Thank you.